My friends, it is that time again, your favorite time of the week, and that is listening to another episode of the MLO Project. If this is your first time here, welcome. If you are a returning, listener, hey, thanks for coming back. Thanks. I'm glad that Michael did not chase you away. And speaking of my fearless co-host, Mr. McAllister, Michael, what's up?
What's up? See, I feel like you set me up for low energy. Like you just draw out, and so I come in, I'm like, yo, what's up, Frazier? And you're like, dude, wake the fuck up, dude. What's wrong with you? And yeah, so anyways,
well, I was
I'm
just trying
awake.
to match your energy. I was that's how I'm trying to, because I knew like if I'm too crazy, then like you come in and it's like, yeah, this, and Michael's ready to go. Michael, what's up, buddy? And Michael's like, hey guys, I guess we're doing a podcast today.
You know, they call this victim shaming. They call it
good. I'm glad I'm the freaking president of it then, if that's the case. All right, my friends, in all seriousness, Michael is actually excited to do these podcasts, whether his tone says that or not. But he is in fact what we're talking about today, because we always like go over topics and things that we could talk about, and so this is one of his babies, which I jumped on because I think it's an important topic, because as a coach, this is something that I try to warn my loan officers against all the time, and that is the obsession over rates going down, when they're going down, sharing the charts that nobody understands, right? Like doing all the different things. How do I spend time taking away my focus on my business currently to think about because guys, like, and I know I'm just cutting off real quick, and I know I tend to do that, but I have these ADD just kind of kicks in sometimes. But guys, like this has been going on for like 3 years now. Right? Like 3 years now. And yes, at some point you're going to be right. Right. There were so many loan officers that like ate it because they were saying, looking at the data and the historical charts and everything else, the rates are going to be in the four. This was like into 2022. I think, when November comes, rates are going to be in the fours. And I say this every year because it happens every year. As we get closer to the end of the year, this is when the whole like rate adjustment type conversations and strategies starting to come into play. Right. And so you got to stop obsessing over what rates are going to do. Is it an important part of your business? Absolutely it is. However, I know top producers that don't ever talk about rates at all in their posts, in their content about anything, but they do focus on this one aspect of their business, which makes it irrelevant on what rates are doing. And that's what we're going to talk about today. Michael, why did you bring this topic up? Was this important for you to discuss today?
Yeah, to be honest with you, like I initially started this thought train from the other side of the equation, which is like how can loan officers prepare for when rates do drop, right? And then as I'm thinking about this, I'm like, okay, this is a good conversation, but it's also like the activities that I was coming up with were activities that people should be doing every day in their business, no matter what. The things that I was thinking of is like, you want to make sure that you have an open line of communication with your client base, right? You want to establish that open line of communication now and not wait for when rates to drop, so that you don't A, look like an opportunist, but B, get swept up in all the other solicitations that they're going to be getting at that time, right? And so it was like, okay, stay in touch with your database. Oh, okay. I mean, is that any different than what we should be doing every single week? No. Right? No, not at all. So the other piece, making sure that your database is up to date, making sure that like you have accurate interest rates and that you have accurate contact information for all of your database. Again, things that should be done every single week, month, whatever, regardless. And so, yeah, there's two sides to this conversation, which is like, yeah, you got to be ready for when rates drop, but like you got to be ready all the freaking time, because another piece that I thought about as I was driving here and like kind of working through this episode, like if rates dropping was guaranteed, it would already be priced into the rate. Like that's the function of a like free market. That's a function of like a highly technological capitalist market, where it's like interest rates, mortgage bonds like react instantly to news. And so if it was a sure thing, like the rates would already be where you're thinking they're going to go. Like, now that's not to say that like rates can't go further. Of course they can, but the risk of it not doing that is what keeps rates where they are today, and is also what's going to keep your business where it's at today. If you are obsessing over that, and if you're going, oh, I got to get my ducks in a row, I got to do this, I got to do this, like, no, what you have to do is you have to establish sound practices for your business that are the right things to do whether or not rates go down, which again is making sure that you have a open line of communication at all times with your past clients, with your prospective clients that you've talked to about financing, etc. Like making sure, and that, what is that? That's marketing. That's having like good marketing, whether it's whether you look at marketing as being like being on a stage or a platform, like probably not the way to do it today. Marketing is way more about community. It's way more about communication than it's ever been. And so yeah, those are the things that you should be doing in your business, whether or not you anticipate rates dropping. So yeah, this conversation in my head started out as like hey, let's talk about how we can make sure loan officers are prepared for if and when rates do drop. But as I thought through that, and as we talked through that, it was like, well, these are all things that you should be doing every month anyways. And so really the real message is like, why aren't you doing those things now? It's probably because you're trying to time and and getting swept up too much in that rate conversation to begin with. So if you're not getting swept up in that, then you're probably already doing these activities, which means you're probably already ready for if and when rates are going to drop. Yeah, just kind of a weird like chicken and egg conversation of like, hey, do I wait for rate? Do I wait to be able to see the rates dropping to start, acting and doing stuff? And obviously nobody consciously makes that choice, but just psychologically, like, I know I do it too. As soon as you have something that you're like excited about in your business, something that that you think is going to provide a big lift in your business, immediately you start neglecting the important day-to-day things that got you, that either got you to where you are or would get you to where you want to be if you were doing them. And so, yeah, I like psychologically, I feel that piece. We had another topic that we were going to talk about that, very similar. It's just like, it's very easy to get swept up in being excited about something, including rate movement, and then to allow that to cause you to neglect the day-to-day like bricklaying that you need to do to be successful.
As you were talking, I was playing some conversations I had in my head that I have with other, like top producers and some lenders and stuff. And I won't name names, um, but the gist of it is that like, if you've been in this industry for, 5+ years, what do you have to prepare for? Like, I really want to know, like, this is the conversation I was having with them. He's like, he was like, I'll try to like, not, I don't want to get too crazy because he was just more of like kind of venting, and he's like, I don't understand what the F these people have to. I'm trying not to drop as many F bombs on the MLO project, even though this is an explicit comedy. But he's like, what the F do they got to be prepared for, right? And the only reason they have to prepare for anything is because they have shitty systems and processes, right? So I'll tell you right now, as a loan officer, if you are taking focus to spend time, no matter what anyone else is saying, on like being prepared for a boom, right? Like, one is you're already behind the 8 ball because it's the wrong mindset. But two is that like to me, it just says that you don't have systems and processes in place already. And that's the problem, is that the producers I talked about, they're like, rates go up, down, it does not matter. My systems and processes don't change, right? I don't leave people to lurch because their focus is on contact rate first and foremost, meaning they want to have a certain percentage of contact rate with their database, right? And so the people that I talk to, like, the reason how they get prepared for low rates is they did it a year ago, and they had conversations with their database to say, like, what are your goals? What matters to you? If rates drop, is a refi a thing? Do you not care about refi? Like, they have these conversations. Yep. It's in their database, and they have it, and they have their alerts. They have their systems and processes so they can get ahead of the game, because this is what not every loan officer understands. The rate conversation is going to happen with your consumers outside of you all the time, right? Whether it's through mailers, whether it's through call centers, whether it's through Facebook advertising, Google advertising, that message is going to be in front of your consumers 24/7, no matter what you do. So what do you do instead is you play the reactive game, meaning I'm going to wait for something to happen to have a conversation with my database. That is going to be the quickest way for you to lose your retention percentage to go into the garbage can. Right.
Yeah.
You always. And so like what Michael was bringing up, and I didn't, when Michael told me about this topic, I didn't know that's where he was coming from, but it's hilarious to me, right? When he was talking about it, that he was coming from the other end of the conversation and realized like, oh, duh, like this is the shit that you guys need to be doing anyway. That's how you prepare, is by having these conversations today. And I'll tell you, right, like a lot of people are like, oh, rates just did this. Now I'm going to send my database and da. You see those posts all the time whenever we have any rate movement, right? However, the other people are like, it's already done. It's already done, right? Like I didn't have to wait for anything. I already knew this was coming. I already knew that's going. All of that stuff was already happening. So
more importantly, their clients knew it was coming.
Exactly,
because they're
right?
having these long-term planning conversations with them.
Absolutely. So if you're listening to this, if you want to know how you prepare for when rates drop, right? You're having the conversation now. And every time we've had, and I'll call them like little mini booms of like a day, 2 days or whatever, when we had like some really good, rate sheet movement, right? Like those people were already booked and locking loans, right? Like they already had it in play. And then everyone's like, oh, is it over now? Oh, I should have done this. I should have done, guys, like just do it already proactively. And then you don't have to worry about it. So a lot of these people are catching these little, I don't call them, I say booms just because everyone kind of like, and they're not booms at all, but they're just opportunities. So whenever
like
these little
flash,
whenever these these flash sales, these rate flash sales happen, right? They're already done. And while you're trying to like decide like, all right, let me put together a campaign. Let me decide what I want to, guys, they're already at the finish line. Right. Yeah. And so you're playing from behind. If your mindset is, how do I get ready? You get ready by doing the activities that are going to help you with purchases and everything else. But everyone's waiting. And this is one of those like human behavior things. Everyone's like, oh, thinking about another boom or whatever. Now, given the givens, can something happen? So sorry, my chair just decided to go crazy on me. But given the givens, could like some things happen? Sure, right? Like there could be a national housing emergency declared. That's been thrown around, and that could cause. But here's the thing, guys. Like Michael brought up a very important point, right? The reason why proactivity works is understanding that what Michael brought up is that it's already baked in, right? It's so the rate prices and the swings to the better that we've had, like as of late, right? The mini flashes, that was all based off of like the jobs report, all these things that have been baked in. Thinking that the Fed is going to cut rates right now. Could there be additional movement? Sure. But you know what? Like Barry has brought this up. Hammer's brought this up. Dan Rawich has brought this up, is that sometimes logic goes out the window. And what happens when these announcements and stuff comes up, rates actually go up, right? No. Not understanding that the stuff was already baked in. Mm-hmm. Right. And so it's not necessarily the news that happens. It's the comments and discussions that happens afterwards that causes the rates to move. And so, but here's the thing, going back to my original statement, is that I know too many producers that do really well that don't ever talk about rates or factor that in other than the data. So they know they've already had the conversations. That's number one for retention, is understand what your clients' needs and wants are, and then prepare a business that facilitates that. If you do that, you're ahead of the game. Now, you may be thinking it's not that simple, right? It's incredibly that simple, but it may not be easy, right? And here's the thing, most people don't do that. Right? If you go in a Facebook group and says like on a scale of 1 to 5, 5 being like, I have a guest room in their house, to 1 being like, I don't even have my people in a database. How are you with relationship management? More than less, you're going to see people in the 1, 2, and 3 range, right? If they're being honest,
at like 1.7,
right? You're going to see that 1 to 3 range. And so, yes, it's very simple, but people don't want to do the work, right? They're worried about the front of the house, not the back of the house. The back of the house is the money. The front of the house is just the facade, right? And so ultimately you got to decide where you're going to play in. Are you going to play in a world of reactivity, like 90% of the industry? Or are you going to play in the proactive game, the 10%, the smaller pond, right? Where you actually have the opportunities to take market share and mind share in your market because you're the one that's out there being seen every single day, putting messages every single day, having conversations every single day, talking with your database every single day, right? Putting out these things. And guys, like this is, I'll bring him an example. Jonathan Haddad, right? He's the CEO of Nextdoor Lending, which was just acquired by NerdWallet, right? Like the dude's a pretty good salesman, right? The pretty dude. You can look at his production.
One of the best.
He's one of the best, right?
Yeah.
This is the stuff he talks about and does all the time, right? Like this. So like, don't take it from me, right? You're like, oh, Woody Frazier, you're not out there writing loans. But John is. Not only is he writing loans, but he's running a team of professionals writing loans, right? A lot of loans. They do a pretty good amount of production. Again, go look them up. But the point is the fact this is the stuff he talks about, right? Is he wrong? Is he just lucky? Or is this actually the playbook on how you are in the right place at the right time, not in the moment, because you did it 60 days ago. You started building up to it.
Well, and don't even just take don't even take Jonathan's word for it. Like, what my favorite thing is to do is like put yourself in the shoes of the consumer. Like, if you're the consumer, who are you going to go with? Are you going to go with the lender that you're having conversations with throughout the year or over the years about their goals and about their plans and about like at what interest rate it's going to make sense for them to refi? And you're having these conversations, and then by the time it comes up, you're hitting them up and you're like, hey, we hit that threshold. You ready to rock? Let's go. Boom. Like, are you going with that lender? Or are you going with the one that you closed a loan with a couple years ago, and then you heard from when there was a flash in the rates, but you weren't quick enough to pull the trigger, and they promised to put you on the list for the next time it came, and then it came? Like, it's just an opportunist like kind of like kind of feeling as a consumer, especially if you know the alternative. Now, most consumers, they don't know the alternative. That's the good news. That's where the opportunity is most consumers don't know that the alternative is you having these conversations with them throughout the year, being a true consultant and a true partner in their financial future. Most consumers don't know that that is the alternative. So if you go and you lead with that and you execute on that, like, the opportunists don't stand a fucking chance. They don't stand a chance against you. And that to me, I like, yes, follow success. I'm stupid when it comes to that sometimes, where I would rather reinvent the wheel 3 times over than follow somebody that's been successful before me. And so if you're that person, you're listening to this, then look at it the other way and put yourself in the shoes of the consumer. And you tell me if you tell us like, you think that's wrong? Like, you think that that's not a better way to run your business?
Yep. 100%. And so guys, look, what I want to leave you with today, is the importance of not just proactivity, but focus, right? Focus on your business. Focus on, how do I make my business the best machine possible, the best client experience machine, right? The best, origination machine, the best marketing machine, the best sales machine. How do I make that? And it all comes down to systems and processes, right? So if you feel you are unprepared for whatever rates are going to throw you out, right? Or you just feel unprepared in general, look at your systems and processes, right? Would you sign your name to your systems and processes saying like, this is it? Like, I got a good, hey guys, look, you're always going to be able to enhance. You're always going to be the optimize and tweak and stuff like that. That process never stops, right? But look at your systems and processes. Are you doing the things that are needed? That's the only way, the only valid reason, in my opinion, that you should feel unprepared or that you should be focusing on doing anything different. But I think the point that I hope that the message you're taking away from what Michael and I are talking about is the stuff that you should be doing when rates drop, you should be doing today, right? You should be doing today. And it all starts with having conversations, and all those activities, money-making activities, however you want to refer to them, those should happen every single day. And if you do that, you won't be unprepared. You'll be prepared. You'll be ahead of the game. You'll be ahead of your competition. But stop waiting on the market to move you instead of you going out there and I don't want to like reverse that and say, hey, make the market move to you, because the market's not going to move for anyone, right? But don't let the market move. You go out there and you make your own success, right? You dictate where you're going. You dictate the flow. You dictate success. Don't let the market dictate that at all, right? It's all in your hands. It's all up to you. You decide where you're going to go with it.
100%, man. 100%. Stay on your toes out there. Anything could happen at any time, right? You got to keep those systems dialed in, do the activities you should be doing anyways, and when the rates do drop, you'll be ready.
Yeah, and I'm going to leave you with this one comment. What you'll find, my friends, is that when you're proactive with your messaging and communication, is that because the clients are going to see this shit way before you do, right? Because like I said, they're going to get the mailers, they're going to get they're going to see the prompts way before you do, right? Mm-hmm. So when you're doing what we're talking about, guess what? The client will then come to you with questions, but that's only going to happen if you stay relevant. And that's only going to happen if you are doing, or if you're serious about your activities every single day. All right. I got the nod. I got put this one in the can. We're good. Nod for, and that's
and the eyebrows
and the eyebrow, a little creepy on this episode though. Little bit creepier on.
I didn't know I could do that, so I'm just I'm pressing myself.
He's just having fun,
here.
Yeah. But so if you're watching on YouTube, Michael's just in the mirror, making funny faces at himself, so he could do that stuff, guys. But hey, we hope that you enjoyed this episode. And guys, here's an open invitation. If you guys ever disagree with us on a topic that we've been talking about or whatever, this is an open invitation for you to come on as a guest and debate us about it, right? And it will be a good debate. It will be a professional debate, right? Yes. And a lot of people don't know, but I actually was on a debate team, and so I love it. Yeah. Right? And
I literally was.
You were too
here.
You were too? Oh, awesome. All right. Yeah, guys. Yeah. So if you want to come on and debate about what we're talking about because you disagree with it and you're passionate about it, bring it on. We'd love to have you on here. Again, this is the MLO Project, your success, growth. It's all a project, just like everything in this industry. And so we would love to have you on. Did you have something else you wanted to add to that?
I was just going to say, I was literally thinking I want to find something that Frazier and I disagree on. And do
that you and I disagree. We'll definitely. I'm sure we'll find something. Right. Yeah. I guess we disagree on how to handle a group talking session, right? At a conference, maybe.
I was gonna say we disagree on hats. What hats are the best hats.
We definitely disagree on it. You guys could see it on YouTube, but behind here is I fucking dig the hat, right? But the bill is freaking high. Look like Kazoo from the Flintstones, right? Or whatever the dude's name is, right? The little alien dude, right? It's freaking huge. And then Michael's like, oh yeah, no, this is no, it's not. That's not awesome, right? I'm a hat snob, so I have to put that out there. But I don't know if you guys would tune in for a debate on hats, but either way, we'll find something, or you come on this podcast and debate us, challenge us on a topic that you think that we got wrong. So on behalf of Mr. McAllister, I am Frazier. This is the MLO Project, empowered by Empower LO. And we'll see you. Actually, I'm going to coin my co-host. We'll see you at the top.
Yeah.